Alright, what's up guys? This is Taylor and it is Friday the 19th. Market closed like 2 or 3 minutes ago. So we'll do a quick recap and then as always I will deliver the Sunday watches video on Sunday. As the name would suggest. So let's see guys. Little bit of selling pressure here today. So it's been a good it's been a good month here for the market. We got the big push, we came up, we gave the 200 SMA a little smooch, a little peck on the cheek, but we are starting to see signs of exhaustion. And what I mean by that is basically the bulls are running out of gas. And if you're up here at 2 ATR, we're a good 2, 3, 4% above that daily 21 EMA. If the bulls start to run out of gas up here, then you got a pretty good shot of that flush toward that 21. So in terms of exhaustion, on the S&Ps here, we are all out of buy signals. So this whole push is pretty much triggered by the buy signals on those lower time frames. And we've now gone from bullish to neutral. We lost our last man standing today. Always tough to see it happen. The S&Ps, they did have the buy signal here on the 2-hour chart. And for pretty much most of the week, the 2-hour chart did a pretty good job of holding up. But down goes the 2-hour today. So at this point, this kind of opens the door potentially for a little bit more downside towards that 21 EMA. And at the moment, guys, like we've talked about over the last few weeks, my thinking would be, if we pull back to that 21 EMA, as long as we hold up, then I'm looking for some buy signals and I'm looking to get long. So pretty much if the S&Ps can do this, you get your big push, you get the back test holds, and then the big 3 starts to light up. That can trigger the push back towards the upside. So we'll see. Day by day, and we never marry any ideas, but I do think maybe we're kind of teeing up for the flush. Maybe we get down towards that 21 EMA. If we hold, then we could kind of reload for another attempt at that daily 200. So the S&P's down a good 1 and we'll call it 1.5% today. And they're all out of buy signals, all out of stock. There is a shortage on buy signals. The QQQ, down about 2% today, and here's how quick it can happen. We're basically back to that 21. So now the question is, can the Qs hold up here? And if they do, we're looking for some pretty colors over here, and we'll probably look for a few bullish trades. So, like I said, guys, taking it day by day. And in the Sunday video, I'll cover a few spots I think we should watch this coming week. Of course, there's Apple, the strongest name in the market. I'm dying for a chance to buy Apple around 165. But a lot of the market looks the same. The S&Ps, yeah, granted they came in a little bit today. There's still another 2% between the current price and the 21. So we got some room. You look at sectors like XLK. They're down 2% today. They still got some room to that 21, and you're seeing the same signs of exhaustion. So from that 21 EMA, we get a 5-minute, 15-minute, 30-minute, 1-hour buy signal. That triggers the move. We lose those buy signals. We coming on down. So XLK still extended. The transports, the industrials, the utilities, the Amazons, it's all pretty still extended. So as far as a few things that are actually setting up here, if we jump over to energy, now it doesn't look like it, given that XLE was flat today, but given the action in the indices, a little bit of relative strength. So for XLE, we got this big daily squeeze here. My thinking would be as long as we're trading above that 21 EMA, that's a daily squeeze that wants to fire to the upside. That's a move that could take XLE towards $85. So as far as a few of the XLE names, we went with ExxonMobil. So we bought some calls here in Exxon yesterday. Good looking daily squeeze. We've got our 1-hour buy signal, and we're looking for a push here towards 97. The talk of the town today, of course, was Oxy. So this is what happens when big Uncle Warren Buffett comes on out and says he wants to buy 50% of the company, something like that. So, ridiculous move here from Oxy. I mean, flush back down towards 67, 65. I don't think you get it. I'll jump on board if we do. Weekly squeeze, 3-day squeeze, daily squeeze. Bunch of buy signals here. So Exxon looks good. Oxy, of course, is pumping like there's no tomorrow. But then you got pretty similar structure in, names like Chevron. There's Fang. Pretty similar. There's LNG making a big push. So for now, I do think XLE, one spot to watch here in that daily squeeze. And I'll run the scans this weekend, guys. Look for a few more spots here. The one other thing that I wanted to show you is the dollar. So we've talked about the Dixie over the last couple of weeks. Typically the correlation here, the Dixie trading higher, typically results in the market trading lower. So keep this in the back of your mind heading into next week, and we'll cover it again on Sunday. This is a really good looking daily squeeze. Daily squeeze, histogram goes positive. We're back above that 21, and we've got 1 hour, 30 minute, 15 minute buy signals. So if I didn't know better, that all kind of looks like it's gearing up for a push back towards the highs. More likely than not, if the Dixie breaks out here, you're probably going to see the market trade lower. So keep a close eye on that. But otherwise, guys, our win streak, the winning streak came to an end here this morning. So I think it was like 12, maybe 12 or 13 trades in a row. As far as trades that I've posted over at Simpler. So that's the options room, that's my mastery, and a couple of the trades from our live trading. But we are tracking all the trades here since the launch of the Big 3 indicator. So here's the spreadsheet for the mastery. And mind you, this is math based on a 5% position size. So we'll focus on the percentage returns here. So let's see, using the Big 3 signals in July, we were 4 out of 5, and the net return was a 9% return. So up 9% in July on 5 trades, and so far here in August, we are up about 6%. So we got winning trades in Shopify, Tesla, and today we took our first losing trades in a while on Nvidia and Snapperoo. And we're still holding some calls here in ExxonMobil. So before the 2 losses here today in Nvidia and Snapchat, we were up about 19% all combined. Giving back 4%. I'm not too mad about that. Here's why. If you look at the S&Ps, whether we're trending higher or lower, as a swing trader, your equity curve should look its best. It should be growing at a rapid rate when we're getting these kind of moves in the market. We dip, we load up, we get buy signals, we push for 2 to 3 to 4 weeks. Okay, perfect. Now there's a window of opportunity to look for your go-to trade and get a little bit aggressive. So when the market's pushing like that, and keep in mind, same thing in a downtrend, when you get that window of opportunity, that's when your equity curve should be growing. Now when the party comes to an end, it's totally normal to have a little bit of give back. Right? So all of our trades worked really well when the market was pushing towards the upside. Nvidia, Snapchat, they didn't so much go against us because of anything to do with Nvidia or Snapchat. Just more so the S&Ps are down 1.5% today. Kind of takes everything with it. So it's normal to have a little bit of give back when the move pretty much comes to an end. What's not okay, ever, is to give back all your profits. I don't even think you want to give back half of your profits. So from that perspective, throughout the course of this push, we were able to take enough trades to grow the account. Here's my ThinkorSwim page. Right, throughout the course of that push, we were able to take enough trades, enough quality trades, to grow the account by 19%. And again, that's based on a 5% position size. On the little bit of give back here, we're still up 15%. So we didn't give back all the profits. We didn't give back half of the profits. To me, this is acceptable. We're really moving the ball forward. We have a little bit of give back when things kind of start to wind down. That's fine. Now the key is, all right, let's be patient. We really want to wait for that next opportunity, that next moment in time, to potentially catch another move like that. The next opportunity to grow the account another 15-20%. The last thing you want to do right now, while the S&Ps are kind of up here in no man's land, is force the issue and just kind of, fulfill that human desire to wake up and look for a trade every day. So, that's where we're at, guys. The streak has come to an end. But mind you, we're not trading for winning streaks. What we're trading for is, after 50 or 100 trades, we want to make sure we get about a 70-75% win rate, and ideally, the winning trades are about twice as big as the losing trades. So, that's the goal, and for now we got the calls over here in ExxonMobil. So my suggestion, and when I upload the watch this video on Sunday, I'd be curious to see what you all have down in the comments, but my suggestion for now is you're running your scans this weekend as you're building your watch list. Begin to focus on things that you would like to buy at the 21 EMA. And then my suggestion is wait for things to get there, if they get there. When they do, make sure they find support. And granted, not all of you have the big three signals, but for those of you that do and for those of you that don't, I'll cover it here on the channel. I'll cover it during our pre-market prep. If we can get those flushes back to the 21, then we start to pop out a bunch of lower time frame buy signals here with the big three indicator. Well, in essence, that's what triggers that push. So, crazy markets, guys, but hope you all found this helpful. I appreciate you being a subscriber, and I will see you on Sunday for the watch list video. Thinking we're going to have a good list of things to cover. So, enjoy your Friday. Be safe. I'm going to have a little bit of dinner here soon, pop a couple CBD gummies, and see where the night takes me. Alright, guys, talk to you soon. Adios.